Good morning all, CamelbackTrading.org coming to you this Monday morning, October 5th. We're looking at the market profile of the SPY ETF here on Window Trader. So new week. Incredibly, today is 13 years to the day that I left the trading floor of the New York Stock Exchange. It's amazing. 25 years down there and over half off. Time certainly does fly. So, what do we got going on today? Well, right, we're in a 5-day balance, right? Sold off on Friday when the president went to the hospital. Right now, it doesn't seem to be as bad. And look where we are, basically at the top of Friday's range before they basically flushed out because nobody wanted to go home over the weekend long. Volume right now, pre-market, pretty light at 462,000. So let's go over destinations and a game plan for this morning. So the first upside destination was going to be that 11-wide point of control. Right now, with 70 minutes to go prior to the opening, if we open above it, it becomes a downside one. So your first upside destination would be 335.92, Friday's high. We'll use that on both sides of the equation in case we gap higher. Then we have the perfect POC from October 1st at 336.88. Above that, we have the afternoon rally high from that day of 337.65 and 338.74, which is now a weekly high. Right? So our balance high and low are weekly highs and lows. They're going to be the intermediate time frame. For the downside, if we gap higher, we would use yesterday's high again of 335.92. Then we have the then we have the point of control of 334.75, our afternoon pullback low of 331.95, and then Friday's low of 331.19, and then fill in the daily gap. Remember, we filled the weekly gap, but not the daily gap of 329.58. It's 161 points still. Right now, my pre-market low is 332.06, so that's right above the afternoon pullback low, and our pre-market high is 336.89. So about $1 higher from Friday's high. So what is the game plan for this morning? Well, again, depending on the next hour, if we get a gap higher of, say, 25 cents to $1, I would look to take a call play. I would be out if the gap fills. Obviously, the big destination would be that perfect wide POC. In fact, I just realized the overnight high is 1 penny lower than the perfect POC. So if we do get above any acceptance above Friday's high, especially on a gap, we should trade there. So I would look for a call play. Now, in the next hour, if we open up a lot higher right around there, I will not be looking to take a call play, right? Once the gap gets over $1, I won't, especially since that's a visual point which they might want to attack and see where they go from there. Maybe they attempt to get to the afternoon rally high from that day, but that would remain to be seen. So a gap of anywhere of 25 to 50 cents, it's a call play to get the point of control from the first out if the gap fills. In the next hour, if we open below Friday's high, then you can possibly take a put play because a couple of things are going to come into play here, right? We have two large point of controls. We have 13 wide from the first, we have 11 wide from Friday. And what does we have in between both of those? M period from the first, M period from the second. You certainly know my feelings on how any acceptance into either one of these M ranges, and the odds are you're going to probably trade one or the other, right? So if we get acceptance into Thursdays, good chance you get the point of control and trade all of it to the upside. Acceptance back into Fridays, good chance you trade the 11 wide and trade all of it from Friday. Now, A period, I've said this many times, is hard to determine if it's acceptance into there, right? It's a lot easier in B, but I would say the odds are incredibly high. We will trade either one or the other today. Again, if you're in my voice channel room, we'll be going over this together as it's occurring. We are 203 strong. Remember, another 96 people, and this monthly fee goes from the incredibly affordable rate of $20 to still a very affordable $30 a month. And then let's look at the charts just quickly. We'll just look at the weekly and daily. We went over this, right? So to get any traction, we're in a 4-week balance. So the Bulls need to take out Friday's high. If they're able to take out Friday's high, then they can attempt to attack that next balance high of 343, right? That weekly high. We're in a 4-week balance. So right now, they're attempting to take out last week's high. And if we do take out last week's high, then I will officially, even though we're in balance, we would be one time framing up 2 weeks. So I'd see if I would, obviously we'd have to see how the week goes to see if we get above this weekly high or not. But that's the first step, is to take out last week's high and attack the 343.06 level. And on the daily, basically the same thing, except there's something very important here, right? 5-day balance. 4 out of those 5 days we've closed below the 50-day moving average. Well, once again, they're attempting to get above it. Acceptance is key now. So acceptance for me is if we take out this 5-day balance high and close above it today, you'd accomplish 2 things. Not only are you above the 50, but now you're above a 5-day balance high. Very important for the Bulls to do. If not, and you get accepted back into it, well, then that 50-day moving average is going to be fought over once again. Good luck trading today. Have a great day, and we'll recap at 4 p.m.